Hi, everybody. Thank you so much for dialing in. You are here for the Global Good Fund's BEC Community Conversation. We'll get started in a few moments. Hi, everybody. Thank you so much for calling in today. We will get started in a few minutes once everybody has dialed in. If you all want to head over to the chat box and let us know where you're calling in from, we would love to see who our audience is today. All right, well, it is exactly 10 o'clock, so we are going to go ahead and get started. Thank you so much for joining us today. I hope you are all doing well and staying safe. My name is Danielle Crew. I am the Director of Business Development for the Global Good Fund. And I want to thank you all for joining us today for part 2 of 3 of our Be Community Conversation series. Before we get into our main conversation today, I wanted to let you know about a few opportunities that were coming up for BEC members. We are looking for volunteers to help with the next phase of our Search and Selection 2021, as well as mentors for our LEAP program this fall. For those of you who are new to the Global Good Fund, and I know there are a few of you on this call today who are new to us. In fact, we actually have a poll that I am going to launch. If you want to let us know a little more about yourselves, that would be great. Are you a coach? Are you a mentor? Exactly what your affiliation is. And if you're new, that's great, even better. We would love to see who's joining us today. And for those of you who are new, just to let you know, LEAP is a 6-month accelerated version of our main fellowship program that also focuses on leadership development for a selected group of entrepreneurs. And if you are interested in becoming a mentor or helping out with our search and selection process for 2021, I will be sending out additional information following today's call. So if you are interested, you can get in touch with myself or the head of our programs, Allie Johnson. In that same follow-up email, I will share our contact information and how you can get in touch, as well as some more information. And asking you to support these, the leadership development of our program participants is just one of the many goals we have for this selected community. Moving forward, we are going to continue to offer these opportunities and the programs that we are having today. So before we get into our program for today, On impact investing, we're going to be taking a look at how we can collectively work together to increase the investment in diverse voices, as well as look at philanthropic engagement in an uncertain economic climate. I do have a few housekeeping notes that I thought would be helpful to share in advance. Today's program will be recorded. We know a lot of you have registered and you're not able to attend live, so we will be recording today's program and sharing it afterwards. Or if you really enjoyed today's program and you're like, wow, my friend might really, I have a colleague, I have a friend, someone in my network, you can absolutely share this with them afterwards. And we also hope that you ask questions, and we want to hear what's on your mind. So at the bottom of your Zoom webinar box, you should see a Q&A option. That is where you're going to go to type in your questions at any point in today's program. And if for some reason we can't get to them all, that is okay. We'll try to follow up with you after the program has concluded. And now that we have that housekeeping out of the way, I would like to turn things over to Wood Parker, the chair of our BEC, who is going to introduce our speakers and a little more about today's topic. So Wood, let me hand it over to you. Wood, you need to unmute. Wood, can you unmute yourself?
Sorry, Danielle. Thanks very much for those introductory remarks, and good morning, everyone. We're delighted that you've joined us today. Let me introduce our three panelists for this morning. Sarah Dusick is a co-founder of Under Canvas, one of the leading U.S. adventure hospitality companies. In 2017, Sarah was named to the EY Entrepreneurial Winning Women list from Ernst & Young. In 2018, she sold Under Canvas and set off to embark on her next venture. Sarah believes passionately in empowering women to reach their full potential and enabling them to grow in their leadership. In 2019, Enigma Ventures was formed, a venture capital fund focused on investing in women-led businesses in Southern Africa. And Sarah joins us this morning from Southern Africa. Sarah, welcome. Abby Wamimo co-founded Isuzu, a financial technology company that helps people save, build credit, and pave a permanent bridge to financial access and inclusion. He has gained valuable experience working with Accenture, the European Commission, Goldman Sachs, and recently at PricewaterhouseCoopers mergers and acquisition practice. Let me turn this other phone off, I'm sorry. Sorry about that. Abby is a New York University alumni and is a recipient of the Africa Young African Committed to Excellence Award, the Sue W. Hancock Scholarly Excellence in Equity and Diversity Award, the United States Presidential Achievement Award, and the National Excellence in Leadership Award. Abby joins us this morning from New York. Abby, welcome. And finally, Samir Goel is a social entrepreneur, writer, and connector committed to bridging the public and private sectors by bringing together diverse communities to solve the globe's biggest challenges. Along with Abby, Samir co-founded Isuzu, a platform that leverages community-based savings to empower others to better save their income, access larger amounts of capital, and build credit when denied financial access. Samir, welcome. As Danielle indicated, our panelists will be discussing impact investing and some of the implications of that. But before we get into our topic of the morning, let me ask our panelists to tell us a little bit more about themselves and particularly how you became connected to the Global Good Fund. Sarah, let's start with you.
Good morning, everyone. Thank you for the introduction, Wood. It's great to be here with you all today. I am joining you from Cape Town in South Africa. And it has been my pleasure to be involved with the Global Good Fund, I think, for the last 2 years now. I think that's how long. Carrie and I, the founder of the Global Good Fund, met at a chance meeting several years ago, and Carrie told me her story of the work that she was doing through the Global Good Fund. And so much of that story resonated with my own vision and my own dream to be empowering those in emerging markets, particularly in Africa, to rise and shine and build incredible, amazing businesses, as I believe businesses are the path of economic growth and the future and empowerment and a tool for changing the world.
Very good. Thank you, Sarah. Abby, how about you?
Thanks a lot, Wood, and such a pleasure to be here today. Just a brief introduction. My name is Abby Wemimo, just really excited to be here. Just a little bit of a background. I grew up in the slums of Lagos, Nigeria. I had the opportunity to come to the United States for college. And my experience essentially being part of the Global Good Fund communities through being a fellow. I was one of the 2019 fellows, and it's just been such a great experience. But the core ethos of what we fundamentally do, and my passion is really how do we close the racial wealth gap in this country and really pave a permanent bridge to financial access and inclusion for everyone, not just a select few. So just delighted to be and excited to engage in this thought-provoking conversation.
Thank you very much, Abby. And Samir, to you.
Thanks so much, Wood, and such a pleasure to be here with everyone. You know, like Abby said, one of the co-founders of Isusu. As far as my story goes, you know, my folks immigrated here from New Delhi, India, and some of those experiences of early financial marginalization inspired the work that we do here at Isusu. And our real focus is, you know, your financial identity, the color of your skin, what your zip code is, shouldn't really determine where you end up in life. And, you know, that's the fight we're fighting here at Isusu. I've been, you know, it's been an honor to be a part of the Global Good Fund Fellowship. I was a fellow in 2017, and it's just been one of the best experiences and groups of people I've ever been able to be a part of. So delighted to be here, excited to share and have a great conversation.
Great. Thank you very much, Samir. And as I indicated, Samir and Abby co-founded Isusu. And I understand that part of our conversation today will be the importance on economic mobility, and that is an area that Isusu focuses on. And so for those of us who are not familiar with your company, Abby, tell us a little bit more about Isusu and that how you're focusing on this economic mobility issue.
Thanks a lot, Wood. So just for everyone's reference, Isusu is really a company that focuses on helping you capture data and reporting into the credit rating agencies. One of our marquee products is reporting rental data into the credit rating agencies to boost tenants' credit scores. And here is why. Today, if you have a mortgage in the United States and you make good on that mortgage obligations, that data is being reported and then you get benefits for it. But if you're a renter, you're being left behind and that data is now reported into the credit rating agency. The reality of that issue is if you have a poor credit score in this country, it can cost you over $250,000 in interest rates. So that's a huge challenge we need to deal with as a society. And then number two, what we are saying from an income inequality standpoint is really a symptom of a larger issue of not a lot of people making enough to get by. And the fundamental way we've addressed this issue since the founding of this nation and everywhere around the world is to deploy cheap debt, just like the Federal Housing Authority did for a lot of people, but fundamentally excluding predominantly African Americans and leaving them behind. So what we are trying to do is close that racial wealth gap, make sure everyone in society gets a fighting chance by doing something really simple. If you pay your rent, that data contributes to boost your credit score. So lenders can fundamentally leverage that data to make important risk decisions that, in our opinion, can advance humanity.
Thank you, Abby. Sarah, let's turn to you. We're talking this morning about impact investing and social responsibility, and many companies today have social impact divisions, and this has become very important to a number of investors and companies. let's just make it personal. What has changed in the recent past? And for you personally, why is this type of investing important?
Well, I think what has become abundantly clear over the last few months is that the world woke up, and America woke up in particular, to the reality that we have built societies on broken foundations, in that we've created systems that benefit certain segments of society and disempower other segments of society. We can see that through racial profiling in the US in particular. We can see that on a larger scale globally, where you've got the huge vast differences between certain demographic areas, geographic areas and other areas in terms of the West and the emerging developing nations in comparison. And we see, you know, disproportionate rules are at play. And I think one of the powerful things that's coming out of COVID, you know, the things that we are seeing because of the last few months and the way that people are being impacted, as people have different experiences when the world experiences a global pandemic. And I think we're waking up to the reality that there is so much inequality in our world. There is so much injustice around, as Abby was saying, where you were born, what zip code you were born into, the color of your skin, and how that impacts your particular future. And I feel very excited that we're in a moment in time that says we've got to do something about leveling the playing field. We've got to undo some of the foundations. We've got to redig and rebuild some of our foundations upon the ways we are transacting, the way we're doing business, the way we're creating systems in our world that keep some people oppressed and allow others to thrive and prosper. And how can we create a more equal playing field? And that's, I think, one of the exciting things about this era. It's one of the exciting things for me as we look at investing in this time and thinking about driving change and solving problems through the way money is deployed and the way money is invested.
Very good. Thanks very much, Sarah. Samir, let me get you to add to that. Within the context of social impact investing, what has changed in the recent past for you personally to make this type of investing important?
Yeah, thanks a lot, Wood. I think, you know, I wouldn't necessarily attribute this to just the recent past, but I do think that it serves as a, you know, kind of focal point to highlight why this is particularly important. I think, you know, people sometimes think that some of the issues we're dealing with, like racial inequality, are a thing of the past, and recent events have just made it very clear that it's not a thing of the past. But the way I think about, you know, impact investing is really in threefold. It's like, one, you know, historically, money has only gone to a certain set of founders who come from a certain background, right? You grow up in a wealthy zip code, you go to an elite school, you have a similar set of experiences. And what we need to kind of change, if we really want to use impact investing as a tool to unlock opportunity for, you know, communities that have been left behind, is who are we funding? Because when founders with diverse experiences, when founders who, you know, grew up in different communities and the ones that are funded are successful, that money then gets redeployed into that community. I think beyond that, it's really looking at, you know, like, investing in general has always kind of been this idea that you take a product and you scale it as quickly as possible, but that doesn't necessarily hold as strongly when you think about, you know, social impact investing, because these issues we're trying to solve are complex, right? There's investors like Acumen Fund, like Global Good Fund, that really have helped kind of pioneer and create this model around patient capital, and that's needed now more than ever, because issues like, you know, income inequality, housing, food security, they're all tied together, and finding solutions takes time. And that time cannot be kind of mortgaged based on just essentially a return profile of 3 to 5 years. So I think, you know, that's the second piece of, you know, how things are shifting in impact investing. And then I think the third is really, you know, a slant from what I'd call CSR towards more direct investing, because When I think about impact, I think that it has to be at the core of an organization. It can't be something that's adjacent where, using an example, let's say there's a company that's polluting the world and then you use planting trees, right, to offset that. That's not social impact. We need to be investing in companies where if this company is successful, this is a great thing for the world. We don't have to offset. So I think those are some of the ways that we're thinking, or at least I'm thinking about how impact investing needs to change. This has always been the case, but even more so spotlighted by recent events.
Very good. Thanks very much, Samir. Abby, Sarah alluded explicitly to COVID-19, and let's stay with that subject for just a moment. When we think specifically about COVID-19, how has that changed things in the world of investing and in terms of impact investing?
That's a great question, Wood. So when we think about the global pandemic today, it is absolutely unprecedented. We haven't seen a crisis like this probably since the Spanish flu, and something remotely close to it in the last century is probably the Great Depression. The current state of the world economy is we're trying to figure what the real ramifications of COVID-19 would actually be. We've had some stopgap measures implemented by different countries, particularly in the United States, trillions of dollars going to corporations and then some cash transfers going to individuals. We just read the news, in Europe, whereby there's a conglomerate of governments that came together under the auspice of of the European Commission to essentially make sure companies can stay open, but the effects of what's going on with COVID-19 is really dire. So let's break it down from an impact standpoint. The issues we're trying to address has become very, very problematic. We see a large Gini coefficient, so the gap between the rich and the poor continues to grow very, very wide. We can see it evidently from data from folks like Bill Gates, Jeff Bezos, getting more richer, which there's nothing wrong with that because we live in a capitalist society, but fundamentally people are being left behind. Let's underscore that with particularly what Isuzu is doing. At Isuzu, when the pandemic hit in April, what we found was with people in our ecosystem, over 200,000 renters, over 62% of them could not make their rent obligations, which is a big, big deal. What we elected to do as a company is how do we essentially stand by them and work alongside institutions like the Global Good Fund and Acumen America to make sure people stay in their homes. So these are some of the things we need to think about, but from an impact investment standpoint, I think we need to have a clarion call, a bigger action to do something to leverage this catastrophe, because I always believe there's a rainbow after a storm. Just like after the Great Depression, we had the New Deal. Right now, it's time for us to think big from an impact investing standpoint. So what we have been clamoring for is a new concept really called justice capitalism, a system of government, a system of an institution essentially that is centered around making sure justice is the baseline, and then a capitalist society, which has been the most effective distributor of wealth, kicking in. And what does that look like tactically? It is deploying $1 trillion in low loss reserve for folks that we've left behind. Right? We're not saying give people an handout. We're saying we have an opportunity to right the wrong of the past and make sure people have a fighting chance. It is popular ideas like we have $1.6 trillion in student debts in this country and many more issues around the world, but let's make sure that's forgiven so people have a fighting chance. And then from an investment standpoint, it is time for us to invest in people. Less than 1% of investment capital from an impact standpoint has gone to minorities, and predominantly 80% of the issues that society we are trying to address is affected by Black, Brown, and then Latinx folks. So as a society, it's time for us to look ourselves in the mirror and really do tactical things and not be enveloped in our rhetoric of trying to make the world a better place, but doing common sense things like $1 trillion loan loss reserve fund so people can get access to capital and financial institutions can get in play. And from an impact investing standpoint, it is time for us to bet on the people the issues really affect, because when we do that, we have a tapestry of solutions that can fundamentally move the frontiers of not this country forward, but the greater world.
Great, thank you, Abby. Several of you have explicitly mentioned social justice, and obviously that's an important dimension of impact investing, but as you were saying, Abby, so much more in terms of day-to-day life. Let me just remind everyone who is observing this morning, as Danielle said at the beginning of our program, if you have any questions, use that Q&A box to pose your question, and we'll do our best to get those addressed by our panelists before our time expires. Sarah, let's talk a little bit about the trends in women's giving. I understand that you started the Women's Giving Circle with the Global Good Fund. Why was it important for you to start that initiative, and talk a little bit about women, the trends in women's investing? You're on mute, Sarah.
That pesky mute button keeps tricking us up. Just to follow on from Abby's brilliant thesis there about justice, equity. I mean, a lot of what really was the catalyst for the Women's Giving Circle was the idea that one of the problems with capital getting deployed right now in our world, as Samir mentioned, is that there's an elect group of people doing the investing who tend to invest in people who look like them, sound like them, went to the same school, and can talk the same language. And one of the problems with investing is a lot of investment is about trust, and you invest in people that you believe in. And so if we can diversify the pool of people who are investing, and we can diversify the faces of the people who are doing the investing, we might also then diversify who gets investment. And so the idea around the Women's Giving Circle was, how do we get more women involved in investing in others? How do we allow and create opportunities for women to come to the table to back other women? And particularly in this space, and what I am learning about investing in emerging markets is there's a very emerging markets and social entrepreneurships have the same issues, in that you're struggling to get established without maybe many of the safety nets that other people can come to the table with when starting a business. It relies on friends and family being able to support you to not have a job so that you can start a business. And a lot of people don't have those social safety nets. And so the idea with the Women's Giving Circle was, how do we empower women to start businesses? How do we create a pool of seed funding that can be grant-led, that doesn't require a return, that doesn't require a success fee, and can be more than patient, and that can help start women-led businesses. And that was the idea that we had about 18 months ago, to see if we could change the dynamic around investing and get more women involved, and also help more women start businesses, to also change the dichotomy about who was able to start businesses.
Well, bless you for what you're doing in terms of empowering women around the world. But thank you for those comments as well. Samir, Sarah alluded to diversity, and obviously she focused on the gender dimension, but talk a little bit about more diversity in investing. How have you folks at Isusu brought in additional or increased the diversity of your investors?
Yeah, thanks, Wood, for the question. And just to build on what Sarah said, I think the key to solving a lot of our problems around diversity and inclusion, not just in investing, but overall, is just intentionality, right? The reason we're in the predicament that we are is because we keep doing things the way that they've always been done. And what we've proven unequivocally is that just does not work. It works for a very small segment of our population, but it doesn't work for women, doesn't work for minorities, it doesn't work for LGBTQ communities, right? And so the way that we've approached this at Isusu is, now that we're in a position where our business is growing, where we have many investors that are interested in being on our cap table and working alongside us, let's not take the first check that we get offered, but really take a step back, get to know our investors. Who are they as people? What are the communities that they represent? and be intentional about how we build our cap table. We're on the precipice of closing another round of financing, and something that I think Abby and I are really proud of is that 90% of this round is going to be with LPs and GPs that are either women or investors of color. For a fintech company, that's unprecedented, right? But it takes taking a step back and being intentional about how we build. And, you know, there's kind of this myth that kind of comes up in everything where it's like, okay, we can't hire Black and brown people or women because there aren't enough of them, or we can't have investors of color because there aren't enough of them. And I think that's just total BS. It's just taking the easy way out. And so what we're committed to is not taking the easy way out, not taking the first check that comes in, but really taking the time to be intentional about who we bring into our company. And that's how we think about our employees. That's how we think about our investors. That's how we think about, you know, our contracts with vendors of ours. And I think that's what it really takes to build a cap table of diverse investors, because they're out there, especially in the wake of current events. There's been more and more funding going into them. And the great thing is now when a Susu one day becomes $1 billion company, which it will become $1 billion company, the people who get money are those LPs and GPs of color, are those LPs and GPs of women who can now deploy more capital into founders that look like us. And that's the goal. That's how we can create ecosystems in this space.
You mentioned intentionality. I know that from my experience, if we're going to change, if we're going to improve something, we've got to be intentional about it. So that was well said. Let me pose a question to our panelists regarding risk. It's hard to argue against diversity, women's rights, etc., but there's also risk involved in investing. So talk a little bit about how do you assess risk with respect to impact investing? Abby, how about you going first?
Thanks a lot, Wood. And I just really want to underscore particularly what Sarah said in terms of just investing, you know, in people, particularly women giving folks a fighting chance. Particularly for me, now I was raised by a mother and two feisty sisters, and I am who I am today because of the sacrifices my mother made. And you know, Sarah and Tim leading that effort in collaboration with the Global Good Fund isn't just a good thing to do, but a great thing for our society. I think it's a perfect segue to your question, Wood. So when we think about risk at a Susu, one thing we always pay attention to is we don't care about the 99% of what's going right. It is the 1% that can ruin our reputation we always focus on. When it comes to the context of investing, we've proved time and time over again that when we bring a diverse coalition of people together, that is fundamentally profitable for the American economy. Let me give you a case in point. There are 70 million people that either have no credit scores or a thin file in the United States. The average debt in the United States is around $135,000, including mortgage. In venture capital, we like to do complex, you know, mathematics to size the market. But in this case, it's really simple. You take close to 70 million people and you multiply it times 135,000. America in and of itself can unlock over $11 trillion in capital. That's risk, but you know the reward is always there, and we've always proven time and time over again it is important to take audacious risk like that. Even the American experiment, breaking away from the United Kingdom, in and of itself was a risk, but it's a risk that has born the most prosperous country on the surface of the earth. But there are three things we need to focus on as we continue to analyze the concept of risk. Number one, people. People are the most important assets. And then as companies, as an investors, as a society, as we think about the construct of what we're building, we need to make sure we have a diverse set of people, not only in the lower ranks, whereby you have 80% women, and then in the leadership team, there's nothing to write home about. We need to have diversity from a people standpoint across all board. And if you're implementing and measuring and looking at your risk indicators, you see from back testing, and if you can even look into the future, it is fundamentally profitable. Number two, from a purchasing standpoint, if you have a diverse base of a diverse purchasing strategy whereby you're buying from Black, brown, women-led businesses, then you have a fundamentally strong base and not be tied to the bargaining power of the supply. And that way, you're not only paying people through payroll, but you're also purchasing, and that's fundamentally part of your run rate expense as a business, which essentially empowers society. And the last thing, one of the things we can do to edge our risk, which the Global Good Fund is doing, and a lot more other folks are doing in this space, is how we think about that philanthropy, the intentionality of our philanthropy, the long-term approach of our philanthropy, of looking at the social ramifications of what we've created as a society and leveraging our philanthropy to address some of those issues. So I think fundamentally we know and we can agree that diversity and investing in diverse folks is the right thing to do, and yet a profitable thing to do. And the risks are infinitesimal, but really placing it on three core pillars of people, purchasing, and philanthropy can also help us edge against a lot of risk out there.
Thank you very much, Abby. I'm sure that the folks who are observing this would agree with me. I could listen to these three folks talk for an awful long time on just about any subject. But I noticed that we have a number of questions from those who are observing this morning, and I want to turn it over in just a moment to Danielle to go through some of those questions. I will tell everyone that if we don't get to your questions, we'll do our best to respond to them via email separately. And what we'll do after Abby goes through a couple of the questions from our observers, it'll come back to me and I'll ask our panelists for any final thoughts on this overall subject. And then we'll hear from the CEO of the Global Good Fund, Carrie Rich. So Danielle, could you bring us some of those questions?
Absolutely. Thank you so much. The first question, we are going to start with Sarah. Sarah, in your work, there's a lot of trends. Things are changing very quickly, and especially given Abby and Samir's comments that they just made, what are you looking for when your company's making an investment for you personally? And also, what trends are you seeing?
Yeah, I mean, it's been fascinating for us. Obviously, I built a business in the US, like Abby and Samir are in the process of doing now. I'm now in the phase of executing, had a big exit, now wanting to pay that forward and invest in others to climb the ladder. And it's fascinating now for me to think about what am I looking for? How do we level the playing field? How do we use the capital responsibly to give others a leg up, and at the same time not make any concessions for having lower standards. And interestingly enough, as we've looked, and we are investing in Southern Africa and particularly in women, what we have discovered here is there is no lack of talent, and there is no lack of extraordinary ideas that are extremely investable in, that could generate exceptional returns. So not even sort of mitigated impact level returns, but pure venture capital type deals by the bucket load. And for anyone who says that there is no market to invest in Africa, absolutely has not spent any time down here actually meeting real entrepreneurs, solving real problems with real financial opportunities to take advantage of. And so someone told us when I first came down here and said, you won't find any women entrepreneurs to invest in an adventure type way, i.e. looking for 10x returns. Venture capitalists like to see 10x type star returns. We were told you will not find any, let alone build a pipeline to be able to do that. We've run 2 open calls for applications in the last 6 months. We've had 900 applicants each time. And we're hoping to close, we have closed 2 deals already, and we're hoping to close another 6 by the end of the year. And what we have discovered is, in terms of what we're looking for market level returns. But I'm investing in opportunities that solve problems. We're looking for how do we build a better world post-COVID, fractional foundations that have built on inequality over centuries and centuries and centuries. How do we rectify some of those big issues? So how can we make a dent in solving some of those systemic issues in society? How can we empower those who typically have been unempowered? How can we create opportunities? How can we create jobs? How can we build platforms that make life easier? How can we create access and opportunities for those who don't have it? And the opportunities to do that are plentiful. The capital to do it down here is minimal. And that, you know, when we've looked at the African space in particular, about 1% of the capital that's being deployed in the US in typical venture capital deals is being deployed in Africa as a continent. Not just one country, South Africa, a whole continent is getting about 1% of the venture capital. There's a systemic problem right there, because where the money flows, where the power goes. And so how do we address that issue? How do we start deploying capital to enable people to rise, enable people to empower their own destinies? Because the moment we can start building businesses, you have the power to transform whole communities, whole cities, whole nations, a continent. And so that's why for us, deploying capital down here is exceptionally important. And, you know, as far as risk goes, yes, there's currency devaluation risk. We can factor all of that in terms of how we think about returns. There's still plenty of opportunity to drive incredible returns. So to answer the question, Danielle, we're looking for scalable business that have the power to drive an enormous amount of economic benefit, social benefit, and drive an economic return that's commercial. I want to go to my LPs and say, I can do better with your money in Africa than I can do with it in the US potentially. And let's build. Let's start from the ground up, and let's build, and let's make things happen and see transformation happen before our very eyes.
Wonderful. Thank you so much. Thank you so much for that response. Next question actually is for the four of you. I would love for each of you to weigh in, and we're actually we'll start with Abby, and then Samir, if you want to weigh in afterwards. We have a question here from the audience about how much should an impact investor focus on funding underrepresented groups who have a viable business plan versus non-diverse entrepreneurs who have a great social impact plan or idea? How do you balance those two? Where should the focus be, and how do you essentially assess these two different options?
Yeah, thanks, Danielle. So if I understand correctly, it is essentially, you know, how do we prioritize funding, particularly for a diverse leadership team as opposed to a non-diverse leadership team addressing a systemic, you know, diverse issue. Is that correct?
Well, if it's more, if somebody could have a great social impact, but it's coming from a non-diverse source, but it could have a good outcome versus an underrepresented voice or entrepreneur with a non-traditional business idea.
You got it. Thanks for the clarification. So I think my modus operandi is really simple. For you to solve the big social challenges today, you need a diverse leadership team. Point blank period, because without the equal representation, there's something that's missing, and that's proximity to the issues. For example, I grew up in the slums of Lagos, Nigeria. When I came to the United States, my mother and I couldn't get access to a loan in Minnesota. We went to one of the biggest banks, we were turned away. We borrowed money at over 400% interest rate, and that's not fair. But if you have a non-diverse team that can relate to issues like this, the intention might be you're trying to do what's best for the world, but you do need folks on the same level to tell you what is going on, tactically create solution that is representative of the people you're trying to, you know, support or, you know, bring out of poverty. So the short answer to the question is, I don't think impact at scale or addressing the big social challenges we care about as a society is possible without having a diverse leadership team. And that doesn't mean the founder needs to be Black, right? Or, you know, brown or diverse. It could be someone, it could be a Caucasian person, but the leadership team needs to reflect the realities of what's going on the ground. And that's the way we can have really, really systemic change.
Thank you.
I would agree with that, Abby. And I think it has and should be unacceptable now to be walking into a boardroom full of white men. It should be unacceptable to be walking and seeing leadership teams that are filled with white men. It's not appropriate, it's not necessary. And I think in terms of answering the question in terms of prioritizing funding, I think the more that investors demand that we're seeing, diverse teams being backed, the more it will become the norm. And I think, there's power with money. And so how we set precedents, how we make demands for diversity, how we change the expectation, and therefore we change the dialogue. And I agree. Diverse teams are likely to be more successful. It is proven fact. And so it's also good business. It's not just good ethics. It's good business at the same time. And so I can't tell you how many meetings I have walked into where I'm the only woman in the room and the only voice at the table. It's unnecessary. And, Samir and Abby both said, it's not because women won't exist. It's not that there aren't enough and there aren't enough capable people. Sometimes it's harder work to find them, but find them we must, because it will change the way our world functions, and it will create greater impact overall.
Yeah, first and foremost, I think we just need more investors like Sarah out there. That would be a major win for all of us. But just to underscore, I think if we look at history, we've actually seen time and time again, when we try to make change and the people who are affected by the problem aren't part of the solution, then we just have unintended consequences, right? It's like a Dante quote or something, but the road to hell is paved with good intention, right? We need to have people who understand the problem or have experienced the problem, usually who are diverse people, to actually address those changes appropriately. And beyond that, I think it's the right thing to do, because historically our venture capital has kind of worked on the model of guilty until proven innocent. And what I mean by that is we always factor in risk, going back to risk, on what we don't know. And what people haven't seen are teams led by diverse people, or that even include diverse people. And so because of that, that's considered high risk, so capital doesn't even go there. So in some ways, it's a moral obligation and a business obligation to push teams to be more diverse, because historically we've pushed the opposite way, right? Like, why is it that somebody in a hoodie that drops out of a college is less risky than someone who's Black or brown or a female entrepreneur trying to solve a problem that they've experienced firsthand? So we also have a collective responsibility to push for more diverse teams to right some of those inequities that we've seen in investing.
Okay, lightning round, because we are running short on time and we want to get to final and closing thoughts. There's a lot of questions here, and if you are all so willing, I would love to be able to send them to you following today's program, so you can get in touch with those who are asking, because I think it's, again, we could listen to all of you talk for a very long time. This is a phenomenal conversation. So we have a bunch of questions here asking for examples and asking if you can highlight some creative business models or organizations who are doing this work well. In a lightning round, you don't have to give any context. Can you, each of you, name one or two companies that you find are really have hit, figuring this out and doing it well? Let's start with Sarah.
Go first, Danielle. I'd like to say Abby and Samir seem to be doing a pretty good job to me. They've figured out a lot of this stuff and are really working hard to build an inclusive business and solve a very big social problem. And financial inclusion is I look at a lot of financial fintech businesses, a lot of financial inclusion businesses every single day, and the financial services gap that exists is extraordinary, I think for most of us who have my skin tone, have no clue what exists out there in terms of the lack of accessibility, the lack of resources. Abby mentioned, coming to the United States and having to take a loan at 400% interest. That is normal for every African on the continent in terms of the interest they would expect to pay over a short period. 400% interest given. It's just what you're playing with. If you want to trade, you want to do business, you're gonna pay hefty interest. So how do we close that gap? How do we think about the ability to borrow money at normal rates? I'm very proud that we've just made our second investment in a fintech company out of Zambia called Lupia. And they are doing microloan. They're the first online platform for lending in Zambia, which is an amazing achievement. And they're lending at infinitely cheaper interest rates than anybody else out in the market, providing loans and financial services for those who are unable to get services from the bank, and those who have credit records that are not acceptable to a normal banking institution. So trying to change the dichotomy of who can access capital to move their lives forward, and who can borrow at rates that are not going to make them go under, which is super exciting for us. A husband and wife, African husband and wife team called Lupia. They're a fantastic company.
Sure, happy to speed round here a little bit. But firstly, Sarah, thank you for those incredibly kind words. The world, I still stand by, the world needs more investors like you who see that, while talent is equally distributed, opportunity is not, and try to bridge that. But a few companies that come to mind, and I kind of use these examples to show that some of these things are really basic, but one is a company called Bevel, right? And the innovation that they made was literally just realizing that razor blades like Gillette are bad for the skin of people of color, and that they actually call it irritation and actually like hurt your skin, right? And what's wild is that company sold for $1 billion, right? It's not just a handout, it's $1 billion acquisition, because actually Black and brown consumers have a lot of buying power, and that solves a real problem. Another example is a company called Hot Hijab, which just takes away the stigma of wearing hijabs and the social kind of stigmatism there, but is a really powerful statement that empowered a lot of women, specifically from the Middle East area. And then the third I think of is a company called Pigeonly that basically allows inmates to communicate with their families and maintain essentially humanity when they're locked up, and often for crimes that they shouldn't be locked up for. So there's many more, but those are a few that come to mind. And I think just want to highlight that some of these things are really simple, and it just takes a little bit of supporting people who have been there and experienced the challenges firsthand.
Yeah, and for me, I think one company I would really highlight is a company called Okra. It's essentially a huge financial technology platform based out of Nigeria, run by an exceptional woman, CEO, CTO, and just one of the finest engineers I have seen. So they're doing exceptional work. What they're doing is think about plaid in the United States, and they're trying to do that in Nigeria particularly. So just incredibly proud of what the team has done. I like to talk about asset management a lot because companies is one. So folks like Impact America Fund, Keisha Cash, really the ethos, just like what Sarah is fundamentally doing, is trying to invest in diverse founders and making sure we all have a fighting chance. And number three, on really from a private wealth and an asset management standpoint, is institutions like Ariel Investments, the first African American owned asset management firm based out of Chicago, Illinois. They really embody what diversity should look like, and then they're investing billions of dollars on the finest corporations out there. So really, those companies that are really addressing the core roots of what's going on from an access standpoint and above all capital, it really piques my interest for the past couple years now.
Thank you all so much for your remarks. I want to pass things back over to Wood.
Okay, thanks very much, Danielle. And let me thank those of you who are watching today for your questions. As I and Danielle indicated earlier, we'll do our best to respond to those questions via email separate from this. We're running out of time. And so before I turn it back over to Carrie, I'm going to ask our panelists to be very, very brief and succinct. But is there any other dimension of this topic of impact investing or risk or diversity that you would like to share with our audience? Sarah, you first.
This is our moment in time to drive extraordinary change. We have this moment, the 2020 horror story of our pandemic could be the greatest gift that we've seen for 100 years. And I don't say that to minimize the huge number of people who have suffered and died through this horrible, horrible disease. But what I do say collectively is we've got to lever the opportunity. We've got to take hold of this moment in time as a moment to drive change, as a moment to say no more. We're not settling for the status quo. We're not going back. We're just going forward. And we're going to build for the future, and we're going to rebuild our foundations and build a better, fairer world for all. And we can all take responsibility for how we do that, regardless of who we are, what we do, whether we're an investor, an entrepreneur, someone who has a regular job. We can all make daily decisions as to how we're going to build a better world. But this is our moment to take advantage of a very horrible situation and say, this is ground zero, and how do we move forward from here?
Abby,
Thanks, Danielle, and such profound thoughts. So I think on my perspective, and quoting a good friend of mine, is there's always a rainbow after the storm. We're having a storm of a pandemic right now. There's no better opportunity for us to level the playing field, give people a fighting chance, invest in diverse companies, invest in women, because it's not just the right thing to, it's not just a good thing to do. It's the right and profitable thing to do. And as a society, we need to embrace the reality that being challenged is absolutely inevitable, or being defeated. And not standing up to this ideal is an option, and it's an option we shouldn't take. It is one that we should rise to the occasion for and be in the arena trying to make this world a much better place than we found it.
Yeah, I think to keep it brief, one thing that I would just reiterate is intentionality. Whether, Sarah said it well, like no matter where you are, you can make a choice every day to be intentional about things as basic as where are you buying from, who are you hiring, where are you investing, right? It's the little choices that we make every day that essentially eventually end up influencing society. So regardless of where you are, be intentional about how you approach things. And then just to help transition, I also wanted to express our deepest gratitude for organizations like the Global Good Fund that have bet on people like Abby and I, helped us be the best versions of ourselves, and have shown us boundless support from day one. We need more organizations like Global Good Fund out there to support founders and entrepreneurs like us.
Perfect. Thank you so much. And thank you again. I think Wood was having some internet connection issues. So I would like to turn the program for some closing remarks over to Carrie Rich. Carrie, the floor is yours.
Thank you. And thank you especially to Sarah, Abby, and Samir, and Wood for the conversation. You are role models in what you're doing, and it's such a pleasure to get to partner with each of you. We know firsthand how incredibly hard, it's so hard. This work is so hard. And each of you has individually and collectively moved the needle forward. And we're so grateful to be a small part of your stories and journeys. To the audience members, I hope this conversation made you a little uncomfortable and was a little provocative, had you squirming in your seats a little bit, and has you all riled up to go ahead and and make a difference in your respective lines of work. As all of you just heard, we've been learning about the power of impact investing and why it is so critical that we invest in underrepresented voices. And so I thought I would share with you that those of you who know the Global Good Fund may not know that a few years ago, about 4 years ago, we started our own work with an impact fund. And our first impact fund had the goal of investing in companies that exist to generate profit as well as create social impact in the world. And I'm pleased to report that 4 of those 5 companies are led by women and people of color. And 4 of those 5 companies are on track to produce market returns and incredible outsized social impact. And so one of those companies being Isusu, and those companies are also possible because of the Women's Giving Circle that Sarah Dusick created to help create a pipeline for more women entrepreneurs to come forward. So you can see how all of this ties together and also lays the groundwork for a second fund. So we are just launching fundraising for Global Impact Fund 2. And I would love to share more about opportunities to engage directly as investors, to learn more about the fund, and also to engage with Sarah, Samir, and Abby on their opportunities as they go out and raise capital. And so to do that, we are going to be sharing Sarah, Abby, and Samir's contact information in our follow-up email so that you have an opportunity to communicate with them directly. Before we conclude today's program, I want to share with you just a few housekeeping items. Our next program will be August 10th and features the Global Good Fund board member, Rachel Watson, as well as Tom McDougall, who's a Global Good Fund alum and the founder and CEO of 4P Foods. Their discussion is going to focus on entrepreneurs as change agents, and we'll give you a bit of a look inside the Global Good Fund as well. The program will be a great opportunity to introduce your friends and networks to our work and learn more about what we do. So if you haven't already registered, again, we'll be sending out more information about how to do that, and we encourage you to register. As we conclude, I want to reiterate Danielle's comments earlier that we are looking for volunteers for the Global Good Fund to help with our 2021 search and selection, which means we need help reviewing the applications of amazing, diverse social entrepreneurs from all over the world. We would love to engage you if you'd be interested in volunteering to help review applications. As you exit today's conversation, a link is going to pop up asking for your feedback about today's program, and we'd be very grateful if you would please fill that out. We use your input to build out the BEC network and make future programs relevant to your interests. And finally, I want to conclude with a big thank you. The Global Good Fund would not be able to do its work without you. And Sarah and Samir and Abby, thank you for continuing to be shining inspirations of what it takes to create a better world through social business and impact investing. Thank you for your time today. Thank you for your support of the Global Good Fund, for helping the Global Good Fund grow our collective impact, and for being part of this impressive community. We can't wait to see you all again soon.
Bye, Sarah and Danielle.
Bye, guys.